Welcome to Elite Finance Insights, your gateway to the financial secrets of the world's most iconic success stories. Every tip we share is a key to the strategies once reserved for the elite. Ready to unlock your financial potential? Let's dive in. But what if I told you that one of America's most polarizing business moguls holds the keys to legally minimizing his tax burden in ways that could completely change how you think about managing your own wealth? Today we're taking a deep dive into Donald Trump's tax secrets and exploring exactly how he uses legal loopholes to optimize his finances. In the intricate maze of the U.S. tax code, many strategies exist that allow savvy investors and business owners to significantly reduce their taxable income. Donald Trump, known for his extensive real estate empire and high-profile business ventures, has famously utilized these legal avenues to transform seemingly astronomical profits into manageable tax obligations. One of the core strategies that Trump and many successful entrepreneurs like him rely on is depreciation. Depreciation is an accounting method that allows property owners to deduct the cost of a tangible asset over its useful life. In the realm of real estate, this means that a building's value is spread out over decades, with a portion of the cost being deducted from taxable income every year. For Trump, whose portfolio includes numerous high-value properties, these deductions have played a crucial role in lowering reported taxable income, even when the nominal profits appear enormous on paper. Beyond depreciation, Trump has also employed a strategy known as cost segregation. This technique involves breaking down the components of a property to reclassify certain assets, such as personal property or land improvements, into categories with shorter depreciation lives. By accelerating depreciation deductions, cost segregation enables a property owner to claim larger deductions in the early years of an asset's life. Imagine owning a commercial property where traditional depreciation might allow you to deduct a small percentage annually, but with cost segregation, you could front-load these deductions, significantly reducing your tax liability sooner rather than later. It's a legal strategy that, while complex and technical, offers a powerful tool for any investor looking to maximize tax efficiency. Another cornerstone of Trump's approach is the strategic use of operating losses and carryover provisions. The U.S. tax system allows businesses that incur losses in one year to carry those losses forward to offset future taxable income. In practice, this means that if a business experiences a rough patch one year, those losses can be applied against profits in subsequent years, reducing overall tax bills. Trump's various business ventures, which have seen their fair share of both ups and downs, have often been structured in such a way that early losses can be used to offset gains in later, more profitable years. This strategy doesn't mean that a business is performing poorly, rather, it's a calculated move to manage cash flow and tax obligations over the long term. Critics of these strategies often argue that they allow wealthy individuals to pay far less in taxes relative to their income, thereby contributing to broader issues of income inequality. However, it's essential to understand that these methods are not only legal but are embedded in a tax system designed to encourage investment, risk-taking, and economic growth. The provisions for depreciation, cost segregation, and loss carryovers were implemented by lawmakers with the intention of spurring investment in assets such as real estate and business infrastructure. Trump's tax strategies are a manifestation of these rules, demonstrating how the system can be used to one's advantage when properly understood and executed. Another intriguing element of Trump's tax playbook involves the way he structures his business entities. Rather than operating as a single monolithic enterprise, Trump's empire is organized into a collection of separate corporations, limited liability companies, and partnerships. This approach not only helps in managing risk by isolating liabilities across different ventures, but also creates opportunities for tax optimization. By compartmentalizing various aspects of his business, Trump can ensure that losses in one entity are used to offset gains in another. This method of segregating income and expenses across multiple entities takes full advantage of the legal provisions within the tax code, effectively smoothing out the overall tax picture and reducing the effective tax rate on his personal and corporate earnings. Valuation of assets is another complex area where Trump's strategies come into play. The IRS requires that all assets be valued at their fair market value, yet determining this value isn't always straightforward, especially for unique or high-value properties. In some instances, Trump's tax filings have sparked debates over asset valuation, with critics questioning whether certain properties were undervalued. While these valuation practices are legal when backed by thorough appraisals and expert opinions, they highlight one of the gray areas within tax law. Accurate asset valuation is critical, as it directly impacts the amount of depreciation that can be claimed. By leveraging the inherent complexities and occasional ambiguities in property valuation, Trump has been able to maximize deductions and minimize taxable income, all within the boundaries of the law. It is important to stress that all these strategies, depreciation, cost segregation, loss carryovers, entity structuring, and asset valuation, fall under the umbrella of tax avoidance, not tax evasion. Tax avoidance is the legal practice of using the provisions of the tax code to minimize tax liabilities, whereas tax evasion involves illegally misrepresenting or concealing income. Trump's methods, controversial as they may seem to some, have always been within the legal framework established by Congress. This distinction is critical. What many view as exploiting loopholes is in fact simply taking full advantage of incentives and deductions that the tax code explicitly allows. For many high-net-worth individuals and large corporations, these strategies are essential tools in managing finances effectively and reinvesting capital back into their businesses. Understanding these tax strategies can be a revelation for anyone interested in financial planning. The U.S. tax code, with its thousands of pages of regulations and countless provisions, may appear daunting at first glance, but within it lie numerous opportunities for those willing to invest in learning its intricacies. For instance, the concept of depreciation not only applies to real estate, but also to a wide range of tangible assets used in business. Whether it's equipment, machinery, or even certain types of intellectual property, understanding how and when to apply depreciation can lead to significant tax savings. Trump's extensive use of these strategies serves as a case study in how deep knowledge of tax laws can transform a business's financial outlook. Moreover, it's important to recognize that these strategies are not static. Tax laws evolve over time in response to economic conditions, political pressures, and shifts in public policy. What may be a valuable tax-saving strategy today could be altered or eliminated in the future. This dynamic nature of the tax code underscores the necessity for continuous learning and professional advice. High-profile entrepreneurs like Trump are known to invest heavily in expert accountants and tax attorneys, ensuring that they remain compliant with current laws while taking advantage of every legal benefit available. For the average investor or business owner, staying informed and seeking professional guidance is essential to navigate the ever-changing landscape of tax legislation. Consider a hypothetical scenario to illustrate the power of these strategies. An investor owns a commercial property valued at $100 million. Under traditional depreciation methods, the property might be depreciated over 39 years, allowing for an annual deduction that appears relatively modest compared to the asset's overall value. However, through cost segregation, the investor can identify components of the property that qualify for accelerated depreciation, front-loading a much larger portion of deductions into the early years of ownership. Over time, these larger deductions can significantly reduce taxable income, freeing up cash that can be reinvested into other ventures or used to offset profits in other areas of the business. This example encapsulates how leveraging legal tax strategies can make a substantial difference in financial outcomes. In the broader context, Trump's tax strategies also highlight the importance of viewing taxes not merely as an inevitable expense, but as a crucial element of financial planning. By treating tax planning as an integral part of business strategy, rather than an afterthought, individuals and companies can optimize their operations and reinvest saved funds into growth and development. This proactive approach to tax management is something that many successful business owners have embraced. They understand that every dollar saved on taxes is a dollar that can be reinvested into the business, fueling further expansion and innovation. Yet while the strategies employed by Trump can be incredibly effective, they are not without controversy. Many Americans are understandably upset when they perceive that the wealthiest among us are able to pay a fraction of the taxes that ordinary citizens face. This tension is at the heart of ongoing debates about tax reform and fairness in our society. It raises critical questions about whether the current tax system, with its myriad deductions and incentives, is structured in a way that benefits a select few at the expense of the many. While these are important issues for policymakers and the public to address, the focus of today's discussion remains on understanding the mechanics of these strategies, rather than passing judgment on their broader implications. The key takeaway is that knowledge of the tax code and its opportunities can empower you to make smarter financial decisions. For those who are serious about building wealth and securing their financial future, understanding these legal mechanisms is essential. Even if you don't have a multi-billion-dollar empire at your disposal, the principles of depreciation, strategic loss management, and intelligent asset structuring can be applied on a much smaller scale to benefit your personal finances or small business operations. The world of high finance is often shrouded in mystery, but at its core, it is built on fundamental principles that are accessible to anyone willing to learn. As we reflect on Donald Trump's approach to taxes, it becomes clear that his methods are not simply a product of luck or opportunism. They are the result of careful planning, a deep understanding of the legal landscape, and a willingness to push the boundaries of conventional financial thinking. His tax strategies offer valuable lessons for anyone looking to optimize their financial affairs. Always be proactive, seek expert advice, and never underestimate the power of a well-crafted financial strategy. While the debate over the fairness of these methods continues to rage, the underlying principles remain a testament to the fact that in the world of finance, knowledge truly is power. In closing, the secrets behind Trump's tax strategy are emblematic of a broader philosophy of financial management that emphasizes foresight, strategic planning, and the intelligent use of legal frameworks. Whether it's through the meticulous application of depreciation, the technical finesse of cost segregation, or the artful structuring of multiple business entities, these techniques illustrate that the U.S. tax code, with all its complexity, offers a range of tools designed to reward investment and innovation. As you consider your own financial journey, remember that the key to success lies not just in earning money, but in managing it wisely through informed, strategic planning. Thank you for joining us on this in-depth exploration of Donald Trump's tax secrets. The world of legal tax strategies may seem like a labyrinth, but with the right knowledge and guidance, it can become a powerful ally in your quest for financial freedom. Stay curious, stay informed, and always remember that understanding the system is the first step toward mastering it. This has been Elite Finance Insights. Until next time, keep unlocking your financial potential.